Hello, good morning. You're watching Buy Now, Sell Now on ET Now. I'm Vinny Motiwala along with me, Cheryl D'Souza as well. Cheryl, from the day's highest point, look at the fall that we've seen. We saw that slight bit of a jump up and then just going down and down. That's the trend for Friday. Freaky?
No, I would not term like that because the fact that we've actually seen a fresh record high levels when it comes to the benchmark indices on an intraday basis. No doubt the markets are sharply off the day's highest point. You have Reliance Industries also that's contributing to this fall for the markets. So yes, we are sharply off the day's highest point. That is your Nifty index. Also, remember at one point in time we were actually testing that 22,800 mark. But from there on, we've given up all of those gains. Nifty Bank also, that one also has seen a sharp knock from the day's highest point. For the Nifty, it's over 200 points from the day's highest point that we've seen the fall. Let's take a look at what it is for Nifty Bank at this point in time. And Nifty Bank also has seen a sharp knock from the day's highest point. So yes, a weak texture coming in for the markets as of now. Let's take a look at which are the list of stocks that are in focus. Remember, the Bajaj Finance is among the top gainer on the Nifty at this point in time, given the fact that they have got some sort of a relief coming in from RBI. So at one point in time, we had Bajaj Finance that was trading higher by about 6% or 7%, and now it's trading higher by about 4% or so. Apart from that, you have Coal India, ONGC, Bajaj Finserv that are the amongst other set of gainers in trade. While on the flip side, you have Bharti Airtel, L&T, HDFC Life, Nestle among the other set of losers in trade. Right now, the advanced decline ratio, Vinny, has actually tilted in the favor of the decline. So yes, that's the market texture looking like, and yes, we've slipped below 22,600 mark as well.
Okay, yes, we've slipped below the 22,600 levels as well. And like you were saying, Reliance clearly among the top losers that we're seeing for the benchmark indices. Other than that, L&T, Bharti Airtel, other names that are popping up. And yes, we do have Britannia, which is also falling in trade. They will be reporting their numbers. But yes, a subduedness that we're seeing. Not much of an excitement for Britannia in trade as well. But obviously we'll be talking about a lot more in terms of the markets and a lot of individual stocks as well that we will be talking about. And other than that, let's also keep an eye out on in terms of some of these other movers that we've seen and sector-wise performance also. We're seeing that Nifty Metal is the only one, Cheryl, which is managing to hold on to some bit of a gain.
Absolutely, Vinny, some bit of gains coming in for Nifty Metals. But let's take a look at what the charts are indicating. I believe Kunal is joining us. Okay, we are yet to get Kunal on board, but yes, so that's the way how the markets are looking like, a weak texture coming in for the markets. But Avinash, very good morning to you. Thank you so much for joining us on the show. And Avinash, markets definitely seeing a sharp knock, but the star performer today is Bajaj Finance. Just within 5 months of that sort of an RBI note that they got, they have managed to rectify or actually give some sort of rectification. And there you go, RBI giving a nod to it once again.
Yeah, good morning, Shakil. I think clearly, I think the notification from RBI now clearing Bajaj Finance has been a big positive for the stock. We believe that, this notification change is going to actually help the company now record a stronger kind of, overall top line as well as profit growth, because this was one medium by which, the scale up to its operations was quite, successful earlier. So I think my sense is that markets are definitely giving it a thumbs up, considering that now for FY25, growth would resume again. And within the larger NBFCs, I think, the company enjoys a very large AUM, a very good asset quality, a very large geographical, located customer base. Then this is definitely going to help the company. So I think in the near term, 7,200, 7,300 for the stock looks very much possible. Although the stock was up by 10% in the early morning trade, it's come down a bit. I think any correction at levels of say around 7,000 odd rupees should be used as an opportunity to accumulate. I think over the longer term, I think a good value can be made even from these levels.
Welcome back. You're watching Buy Now, Sell Now on ET Now, show where we get your answers for all of your stock-related queries. Remember, viewers, you can connect to us on the WhatsApp number that'll be flashing on your screen. But before that, let's bring on board our experts for today. We have Kunal Bothra joining us on the show on the technicals, while on the fundamentals, today we have Avinash Gorakshakar. Once again, good morning to Avinash. Good morning to you, Kunal. Thank you so much for joining us on ET Now. And let's kickstart with all the stock-related queries then. And the first one that I'm actually getting in is from Mayank Saraf, and he wants to know about Competent Auto. I'm unsure if either of you all tracked this particular counter. He's been holding it for 2 years. He's saying this particular counter stock actually is expanding their showrooms and it's very cheap compared to Landmark. So either of you all track this one by any chance?
Not really. I don't track it.
Avinash?
I don't track it.
All right, so let me give this one a skip then. Let me take this one. It's come from V. Murli and he wants to know whether he can get into Coforge at the current market price, keeping about 12 to 15 month time horizon in mind and a return of approximately 20% per year. Kunal, let me actually take this to you, given the fact that he's asking a price band or a range for the return coming in for Coforge. Do you think now is the attractive price for Coforge, given the fact that it is reacting to numbers, to the acquisition, and the fact that there is no much guidance coming in for the year ahead? Do you think it's a good bet?
Well, it may not be a good time to try and buy the stock, because historically we've seen that when stocks show such kind of price action, you have to wait out for a point where the price is stabilized. So, today is the yet another day where the stock has shown signs of correction, it's shown signs of a gap down, and this gap has to be filled for the stock to get into any kind of a recovery. Now, the difficult point to try and forecast is that when could the gap get filled. That would generally happen when the IT sector overall gets a lot more positive opinion and you see buyers coming back into the IT stocks, which I think could be some distance away. So I think more than price, I think it's time which is more important over here, and I think you'll probably have to wait out for some more time till the stock recovers and the IT sector looks back into more on the favored side.
Okay, let's move on to the next query. And Avinash, this one is for you. This one is a long-term query that we have from Sanjeev Sinha from Lucknow. GMM Pfaudler for the long term, how is it looking like? And what is the level? Is it the current market price attractive to enter GMM Pfaudler?
Yeah, I think see, if the investor has got a at least a 18 to 24 month view, a long term view, because GMM Pfaudler is a very direct play on the pharmaceutical sector. It has a market leadership in glass boilers, and I think they have a market share in excess of 50-60%, plus they've obviously now taken over the parent of GMM Pfaudler also. So the global market is also quite big. So my sense is that in this kind of stock there are no near-term triggers, but the kind of growth opportunity I see in the pharma sector, both domestically and globally, there's enough headroom for growth for the company to grow. So I think if one were to buy, even in a small portion now and maybe do an SIP year over the next say 12 to 18 months, I think one could definitely expect a decent risk reward. So I think keeping a long-term time frame, one can definitely initiate a trade, but one has to take a slightly longer-term view.
All right, let's move on then. Let's take this query coming from Santosh, who's writing to us from Bangalore. Kunal, does it make sense to enter a fresh CIAT or even for the matter of fact, Karur Vysya Bank at current price for the long term?
See, CIAT again is going through a corrective phase, third consecutive month of the downtrend for the stock. Still, the indicators are not oversold and the prices have not come back into a major mean reversion mode. So I think in that aspect, I would probably wait out for some more time to go for a contra buy on the stock. Karur Vysya, on the other hand, the stock is on a breakout mode. But the current market scenario indicates that maybe you probably have to wait out for a corrective or a pullback to try and buy these stocks rather than buying them at the higher end of the price curve, where the risk reward may not be attractive, even though the momentum could be in favor for you. So I would probably believe that maybe closer to 190, 195 could be a slight better zone to try and buy Karur Vysya Bank.
Avinash, we have this next query from Suresh from Ludhiana. It's a long-term query. Now, they have three stocks that they've given: Hindustan Unilever, HAL and Bharat Forge. They want to know for a time period of 3 years, which one would be the best bet that they would be making?
So I think undoubtedly Bharat Forge would be a better bet. I would not suggest the investor to hold on into Hindustan Lever, because see, first of all, within the FMCG pack, growth has moderated quite significantly. In fact, the recent quarterly numbers which came out and the yearly numbers which came out, I think clearly show that numbers were quite disappointing. On the other hand, if you look at Bharat Forge, now they have entered very key growth sectors like defense, aerospace, oil and gas, and plus they remain market leaders in the auto component market, especially for machined components. So I would say that Bharat Forge over the next 3 years offers a better visibility, a better kind of top line and margin expansion kind of growth. So I think here possibly even at the current level or maybe at a slightly dip, one could look at a huge kind of risk reward, provided the investor can wait here for at least 2 years plus. So I think Bharat Forge could be a better bet.
All right, let me take this next query then. This one is coming for you, Kunal, from Anand, who's a big fan of yours, and actually you've not been taking his query for a while. Yeah, he wants to know about Cyient, 500 shares at an average price of 2,000 rupees per share. He wants to know whether he should exit, hold, or buy some more in order to average out. He has a time horizon about 1 to 2 years or so. What's your take coming in on Cyient, at around 200 rupees per share off his mark?
So you can continue to hold on as of now, but I would probably believe that a bottoming out or an accumulation could be done only if the stock reaches the level of 1600, because so far the stock in the last 1 month has fallen very sharply. In this leg of correction, the volumes have been a tad bit more higher for Cyient, which indicates that there's fresh wave of selling for the stock. And typically, after the first corrective phase, the stock eventually settles down to a trading range and then corrects by another margin of 5 to 10%. That could be a point where you may look to average out further. So that could be closer to 1600 mark.
All right, flashing on the bottom of the screen is the sharp spike that we are seeing in India VIX, Kunal, 10% up move. Even last week we saw such a move coming in from India VIX. It's actually reached a level of about 14.8, very significant.
It is very significant, Cheryl, because it's the 7th consecutive rise day of spike for India VIX. And from 10, almost like 1 week, 10 or 7-8 sessions back, India VIX has now jumped up to 14.7 mark, and that's one of the major reasons why you're seeing the index being a lot more volatile this time around as compared to the last week. So my sense is that the reason for India VIX spiking is the market's now trying to factor in the election event, and I think the closer we get into the election event, the India VIX would probably keep on moving up higher. So if we maintain this trajectory of 14.5 for India VIX, say even for the next couple of trading sessions, that could indicate that we may see the index moderating.
Right, but Kunal, just one more. So is this the trend that you see every election towards, why you're heading towards election, or is it the post-election that you usually see this sort of up move?
See, whenever the markets are heading into an event, that is the time when the markets would probably try to factor in higher volatility. For example, if we are closer to a Fed outcome or an RBI policy or an result for a particular stock, the India VIX spikes. Post the event, the India VIX settles down and it cools off. That's where the markets settle into a range.
All right.
Okay, that's a trend that we keep an eye out on for India VIX. But yes, a lot of volatility that we're seeing right now there. But on that note, let's just step into a very short break. We'll be back with more of the stock-related queries after the break. Welcome back, and you're watching Buy Now, Sell Now on ET Now. Let's keep it going then with all your stock-related queries, and you can send us your queries on the number that is flashing at the top of your screens. But keeping it going with the queries then, and Avinash, this one is from you. This query is from Bharatwaj from Coimbatore. KNR Constructions, for the long term, how is it looking like? Fundamentally, is it a good point to actually look at KNR Constructions now?
Yeah, I think within the EPC construction kind of market, KNR is one of those companies where execution has been very solid. Company has been earning very strong cash flows. And most importantly, it is sitting on a fairly healthy order book, which gives it revenue visibility for the next 12 to 18 months. I think definitely at these levels, if the investor has a time frame of 12 to 15 months, we believe that post the elections, once the new government comes in, construction EPC projects are going to be given top priority by the government, and that is definitely going to fuel further demand as new orders would come in. So I think even at the current level, if the investor has a fairly medium to long term time frame in mind, he can definitely chip in. It's a decent kind of company and the potential to have a decent risk reward, provided the time frame is 12 to 15 months.
All right, markets right now slipping to the day's lowest point as we speak. Let's talk about the next query that I have, and this one is coming from Ranjit from Gurgaon, and he has Aarti Pharma or Aarti Drugs, I believe that is, I'm not sure, 250 shares at a price of 500 rupees per share, as well as CMS Infosystem 300 shares at a price of 400 rupees per share. For the next 6 months, Kunal, what's your take on both of these counters?
Aarti Pharma and Aarti Drugs.
I believe it's Aarti Drugs. I'm not sure if it's Aarti Pharma is not a stock. I think it is, okay, Aarti Pharma is there, yes. So it's Aarti Pharma is the counter that the viewer has, as well as CMS Info.
So Aarti Pharma, I would suggest to hold on to the stock as of now. I would believe that the stock closer to that 500 mark looks to be more of a stable chart, very limited price history. But then, looking at the recent price history in the stability of uptrend, I would probably believe that you can continue to hold on to the stock. Now CMS Info, even though the stock is now trading at a fresh multi-week, multi-month high, if I'm not wrong, I would still believe that it could be a candidate where you may look to book profits, because the stock over the last 1 week, when it has moved up higher from 380 to 420, 430, where the stock has hit today, has been moving up on lower volumes, which means that the stock would eventually come back into a mean reversion mode, and say closer to 380, 400 mark could be a zone where you may look to buy back again.
Okay, Kunal, there's one more query coming your way. This one is from Karishma from Delhi. She has two May futures, Chambal Fertilizers at 432 and Adani Ports at 1352. She's making a loss in both of them. What should she be doing?
See, I think it's a bit of a risk in this kind of a market, because as I flagged off that if the India VIX continues to move up higher, you will have to keep your stop losses a lot more tight and try and reduce intraday or short-term trading, especially on the F&O side in this kind of a market scenario. So I would believe that ideally you should have a stop loss in place into both of these stocks. But since these stocks have fallen slightly below those key support levels, I would probably believe an exit even at current zone.
All right, this next one is coming in from Sudha, who wants to know about two stocks. So which one of the two stocks should she look to buy for a period of about 2 years or so? BPCL and TVS Motor, two totally different sectors altogether. Avinash, BPCL, which is also dependent on the crude prices globally. Also, you have a lot of factors affecting the way how the stock price moves, while on the other end, it is TVS Motor, which is from the two-wheeler space, which has been seeing a good up move as well. Out of these two, which one do you think is good bet for a period of 2 years?
No, I think clearly in terms of secular growth, TVS Motors looks much better, because the crude prices are something where the controllables are not easily within our control. But I think clearly in the near term, crude prices remaining soft, BPCL should do well. But over the next 2 years, I think TVS Motors has a much bigger long runway for growth. Not only has the company been very aggressive in launching new products, but the two-wheeler segment has been now picking up quite well. In fact, we have been seeing that since the last 3-4 months, two-wheeler sales have picked up, and hopefully, we have a good monsoon. Obviously, with obviously more funding given by NBFCs, liquidity becoming normal, the two-wheeler market should grow quite well, and that should benefit a player like TVS Motors. Of course, the stock is available not at a very cheap valuation, but if one were to look at the next 12 to 18 months, both earnings growth and volume growth expansion should actually re-rate the stock. So I would believe that TVS Motors could be purchased, but I think it's better that the investor does an SIP so that he can get the benefit of averaging going forward.
Okay, Kunal, Sam from Goa wants to know on Laurus Labs, what is the target for Laurus Labs that bought it at 449 rupees? What should they be doing now?
So I think I'm assuming it's a short-term play. So keep a stop loss of 442 approximately for Laurus Lab. If it closes below this level, then I think you could look to exit. On the upside, if the stock holds on to this key support and assuming it doesn't break below those levels, then on the upside you could look out for 470, 475 as an immediate target for Laurus.
All right, Kunal, multi-million-dollar question now. This one is coming from Dr. Uday Singh, who's writing to us from Hyderabad. He's a senior citizen. He wants to know whether he can buy Vodafone Idea at current price, and also what will be the price of Vodafone Idea based on the charts in the next 1 year.
Very difficult to anticipate at current
Friday
levels.
googly it is for you.
It's a bouncer. But see, I would first of all suggest not to buy the stock. I think you have better options available on the formidable large cap names in the telecom sector. You can probably look at Bharti Airtel, which is a much more stronger durable stock. I think and look at the returns of Bharti Airtel comparatively over the last 2 years or so. I think if I'm not wrong, the stock was almost at 600 or 700 levels, has moved towards 1300, 1350 odd mark in the last 2 years itself, as compared to a stock like Vodafone Idea, which was at 10, 11 and still is at 13, 14 levels. So, price comparatively, you've seen what the stock has done as compared to the other peers. I would suggest not to venture into this stock as of now. Look out for better stocks in the larger cap front. Bharti Airtel, Reliance could be other two options.
Okay, yes, other good options coming in the telecom space. Avinash, Pradeep from Kolkata has two stocks which they want to talk about. Radico Khaitan, they are holding it at a price of 812, as well as Sharda Motors at a price of 762 rupees. They want to know for the long term, if they bought this stock, should they continue to hold it right now, or maybe book out profits and buy something like a Tata Elxsi or a Hindustan Unilever for a time period of next 3 years?
No, I think both these stocks which the investor holds, Radico, Khaitan, as well as Sharda Motors, should be held on. See, within the liquor and brewery space, I think Radico Khaitan is a very dominant player, and I think markets have obviously looked at the near-term as well as the long-term potential of the Indian alcohol market. So I think here Radico enjoys a lot of strong, brands both within the higher-end premium IMFL kind of category. So here I think the investor can continue to hold. Our sense is over the next 12 to 15 months, as the consumption theme plays out, Radico Khaitan should do pretty well. As far as Sharda Motors is concerned, they've announced a buyback, and that buyback has been at a fairly aggressive level. So I think one can wait for this event to get over. At best, what I could suggest is that they could possibly offer some of their shares in the buyback. That could possibly offer them a decent risk reward. But I think a large part of the growth is still yet to come in, because Sharda Motors is now aggressively getting into electric vehicle category. They are already a large player in the tractor as well as the utility vehicle and the four-wheeler segment. So growth will continue. So I think even Sharda Motors, if one were to hold for the next 12 to 15 months, even post the buyback, the stock should do well. So I would say that there should not be any switch to stocks like Tata Elxsi or Lever, where growth has actually moderated. So these two stocks, I think they should continue to hold.
All right, now VIX is past their 15 levels. In fact, it has seen a spike of about 12% or so. It is at a 2-month high as we speak. And a short while ago, you had Kunal also detail what that particular spike in VIX would indicate. And the market, as we speak, is at the day's lowest point, with the Nifty losing in excess of about 200 or around a percent or so from the day's highest point. Let's talk about this next query coming in from Vidya, who's writing to us from Bangalore. And Kunal wants to know about Power Grid at current levels for a period of 2 to 3 years, but wants to know a target price for Power Grid, as well as Bharti Hexa, which I don't think, I'm not sure if you can comment on that one. 859 was a buy price, recently listed counter.
Yeah, I'll skip Bharti Hexa, but Power Grid is interesting. The stock, I think, has gone through a remarkable change of trend from being a stock which was absolutely sideways, more stagnant into a trading range. I remember I think the stock spent a lot of time trying to consolidate at the 175 to 200 to 20 odd band, and finally it's managed to break out that major resistance for itself. So it looks attractive, but the concern for you buying the stock at current levels would be with the current market scenario. So if in case the market gets into another leg of correction, you could probably see many of these stocks, even though they've been stable in terms of uptrend, they could also get into a corrective phase. So the strategy over here should be to try and use dips, use corrections, as a play where you can look to add such kind of names. It's a good stock, has been doing pretty well over the last 2 years, but I think buying on dips could be a better strategy rather than buying entirely at current levels.
Surely, but given the volatility in the VIX that we're seeing, we are also seeing that the markets have seen a sharper fall. Look at it, 22,500 broken that level, 22,491, down 0.7% is what the Nifty is trading at. Reliance is now down more than 1.5% as of now. Nifty trading at the day's lowest point. Other than that, we have L&T, HDFC Bank, TCS, Bharti Airtel among the top drags for the market. All of them down more than 1%. L&T down more than 2% as well. So yes, we're seeing that increased fall that has come in. Let's look at the mid and small cap as well, and where are they headed as well? Because given that we've not seen a lot of a move there, mid and small cap too trading at the day's lowest point as of now. The only index that is, the sector that is managing to hold on to some bit of a green today as of now is the Nifty Metal. Other than that, everything, Cheryl, now has slipped into the red. Nothing exciting happening.
Reliance actually falling over 2% from the day's highest point, putting pressure on the rest of the market. But let's take stock of what are the queries that you all are sending us. And Kunal, this one's coming from Manish Bhatt. He's writing to us from Ahmedabad. He wants your view on MCX. He's bought about 4 lots for May series at a price of 3,962.
I think it's a good time to book out profits, because the stock for the first time in the last 2 months from I think the end of March, I think I had shown signs of a breakout. I remember I think I had given a buy call at that point of time when it was around 3,700 mark with a potential target of 4,000 plus. It moved towards 4,200 to 50 mark. But I think now, after today's price action, the stock is showing some signs of reversal for itself. So if you're sitting in good profits, you can either look to book out profits. I think you're getting almost 80 to 100 points profit on the stock. Or if you are, if you're looking to encash on the larger trend, then you can probably keep trailing stop loss at cost for MCX and continue to hold on.
Okay, Avinash, this next query is from this viewer who wants to know in terms of Anant Raj, what's the view there? What's the target that one should keep in the short as well as the long term?
I think my sense is the Anant Raj has got a very strong runway for growth, considering that apart from the real estate business, which is the cash cow for them, has been doing pretty well. In fact, last year the company posted a top line close to 1483 crores and a profit after tax of 263 crores compared to 150 crores. The bigger opportunity for Anant Raj in the short term as well as longer term is the data center opportunity. The company is pretty confident that 28 megawatts would get operational by December, and they have a total license capacity of 300 megawatts. So I think if the investor has a 6 to 12 month kind of time frame and he can hold on patiently, I think we could see levels of 440, 450. I think it's a great business available at a decent valuation. And I think numbers for FY25 are going to be a lot better. We expect a PAT of around 350 crores. So I think, one has to exercise a little bit of patience here, but 440, 450 looks very much possible.
All right, this one is coming from Yuvraj. Kunal, for you, he wants to know if we can start accumulating HPL Electric as well as ITD Cementation for the long term right now. Do you think this is the right price to add these stocks in your portfolio?
So they're good stocks. I've tracked ITD Cementation specifically over the last, I think 3-6 months, when the stock had given a breakout from 250 to 60 odd barriers. 300 was the point of the next leg of breakout. In the recent correction also, the stock had come back towards, I think, 300 or sub 300 mark. From there, the stock had started a fresh rally for itself. So it's a good stock, it's a good chart, ITD Cementation, but maybe not the best price. So this is what I've been trying to tell throughout the show today, that these stocks which have been looking extremely strong in terms of price trends and momentum have come back into a bit of an overbought territory, and the markets, when they get into a risk off mode, these stocks are the ones which eventually get into a correction. So you have to buy in staggered quantity in phases, use corrections, use these dips as an advantage where you can look to add quantity and keep on accumulating at lower levels.
Okay, on that note, let's just slip into a very short break. Don't go anywhere. We'll be back with more of your stock related queries after the break.
Welcome back. You're watching Buy Now, Sell Now on ET Now. Markets are near the day's lowest point as we speak. But let's move on and let's try and take all of your stock-related queries. Then this one is coming from Santosh, who's writing to us all the way from Mangalore, and he wants to know about Nazara. He has about 1,000 shares at a price of 777 rupees per share. Should he keep this particular account in his portfolio or look to exit? What's your take coming in on this, Avinash? Nazara Tech, do you think it's worth the hold?
I think, Nazara Technologies is the only gaming company in India, and I think apart from organic, but inorganic growth opportunities also, Nazara has done remarkably well. In fact, the previous quarter numbers have also been quite reassuring. But I think, this business requires little bit of time and a little bit of, a long-term kind of positioning. Although investor has purchased at a higher level, if he's got a time frame of at least 1 to 1.5 years, then only I think he can expect a decent risk reward. I think there's nothing wrong fundamentally with the company, but the stock does not have any near-term trigger. So I think if a investor can hold on for the longer term, then I think he should continue to hold, because longer term value can definitely come in. Although in the short term, the stock will remain in a very close range.
Kunal, this next query is from Gauri, and at the time period she wants to hold those two stocks is BHEL and IFCI is 6 months to 1 year. What is the view on this? Can they look to buy this for the short term?
Again, not a best price to buy these stocks, because both of them have come back into a last 3-4 days very high paced, high action move for themselves. So I think IFCI has moved from 40-45 levels to 54 or 55 the stock had hit today, which means again 20% kind of a jump in a very short span of time makes the stock a bit more overbought. And same is the case with BHEL. I think from 250 to 60 odd mark, the stock has moved towards 312, 318 range today. So which means even the stock is seemingly into a slight overbought territory. Would suggest to wait out for a correction. So assuming if it say comes back towards 285 odd mark for BHEL, that could be a good point where you may look to buy. And for IFCI, if the stock comes back to that 45-47 range, that could be a good buying range.
All right, this one is coming in from Subramaniam from Chennai, and he has hospitality stocks in his portfolio. Actually, Avinash, he has Indian Hotels at an attractive price of 156 rupees per share. He has Royal Orchid at 196. He wants to know whether he should accumulate some more of both of these counters in his portfolio or look to switch to Taj GVK or ITC for the matter of fact.
ITC could be a better choice considering the fact that now their hotel business is going to be demerged into a separate entity. But I think the investor has purchased both Royal Orchid as well as Indian Hotels at decent levels. So I think he should continue to hold here. Maybe some profit booking could be advisable, but I think longer term, at least over the next 12-18 months, the hospitality sector is going to do exceedingly well. The government is also focused more on segments like religious tourism plus domestic tourism, and I think that is going to add to the volumes for the overall sector. So I think he could look at buying a small quantity in ITC, considering that the hotel business is now going to be available as a separate company very soon. But both the stocks which he has purchased, I think, should be held on. Very good growth prospects expected over the next 2 years.
Okay, and with that, let's get started with the rapid fire. Kunal, this first query is for you. Z Entertainment, Subrata Ghosh is holding 4,500 shares at 150 rupees. What should they be doing with it?
I am not sure what's the reason and the rationale for you holding on to the stock still. I would suggest an exit.
Alright, this has come from Malakshmi from Hyderabad, wants to know about Carborundum Universal. Average price, buy price 1,195 rupees per share. Should hold on to this counter for some more time or look to exit and invest the money in L&T? What's your take, Avinash?
Well, I think Carborundum should be held on because the Murugappa Group is now planning a very large expansion in semiconductor facility, and there I think Carborundum is going to play an active role. So continue to hold.
Kunal, Swati from Pune is holding 78 shares of Texmaco Rail at 181 rupees. Continue to hold or sell it?
Continue to hold on.
Alright, this one's come from Gayatri, 25 shares of Datamatics at a price of 760 rupees per share. What should she do? Stay put with this one or exit? Kunal, what's your take?
Continue to hold on.
Okay, Avinash, out of these three stocks, Dollar Industries, REC, PFC, which one is good to buy at the current levels?
I think Dollar Industries seems to be quite interesting because after a very long period, cotton prices have come down. And I think there's been a good turnaround and uptake in the volumes for the business. So Dollar Industries at these levels offers a very good risk.
Alright, this one is from Divya, wants to know between Trent, Schaeffler and Atul Auto, which one is a good one to buy for the next 2 years, Avinash?
I think Atul Auto looks to be quite interesting. A lot of marquee investors have also purchased it, and I think the three-wheeler market is going to grow exponentially. So we could expect another 20-25% growth over the next 12 to 15.
Kunal, Leena from Mumbai is holding HOEC at a price of 190 rupees and L&T at a price of 160 rupees. Should they look to add more at the current levels and continue to hold?
Yeah, continue to hold on as of now, not to add.
Alright, Kunal, TCI Express 35 shares at a price of 1,545 rupees per share. Padma wants to know whether the right time to average it out.
Sub 1,000 could be a better zone to average.
Avinash, what's the outlook for Credit Access Grameen? Viewer Chitra from Kuwait is holding in 150 shares at a price of 1,600 rupees.
I think over the next, say, 12 to 15 months, Credit Access, which is largely into microfinance, should do exceedingly well. So I think, given a time frame of 12 to 15 months, I would suggest the investor to hold. Definitely FY25 should be much better than previous year.
Alright, and with that, we come to the end of the rapid fire as well as the query segment. Thank you so much, Kunal, as well as Avinash, for joining us on the show and taking our viewers through all the stocks that they should have in their portfolio or they should give a skip. But with that, we come to the end of this edition of Buy Now, Sell Now. It's a goodbye for Vinny, myself, and the team that put the show together. Thank you so much for watching. We'll see you next week.